Greetings, financial enthusiasts. Welcome to the House Lux Estate channel, your trusted guide to wealth management and smart investments. House Lux Estate is dedicated to empowering you with the knowledge and strategies needed to navigate the world of finance successfully. Our mission is to help you grow and protect your wealth by making informed investment decisions. Today, we're going to explore a topic that's been on the minds of many. How do you safely invest in gold and silver as a hedge against inflation? As global economies continue to exhibit signs of volatility, diversifying your portfolio with precious metals can be a smart move. In this video, we'll provide a step-by-step guide to help you understand the nuances of investing in these timeless assets. So, without further delay, let's dive into the world of precious metals and discover how they can protect your wealth. Gold and silver have been valued since ancient times, but why do they continue to hold such an allure for investors today? Let's delve into it. Imagine, if you will, the earliest civilizations. Even then, gold and silver were prized possessions. These precious metals were seen as a symbol of wealth and power, often used in trade and commerce and as a form of currency. They were even fashioned into jewelry and used in the creation of sacred objects. Their luster, malleability, and resistance to tarnish made them highly sought after. Fast forward to today, and these metals have not lost their charm. Their inherent value is derived not only from their historical significance, but also from their physical properties and role in the modern economy. Gold and silver are scarce, meaning they are not easily replenished. This scarcity, coupled with their durability, contributes to their value. Unlike paper currency or digital assets, gold and silver cannot be created out of thin air. They must be mined from the earth, a costly and labor-intensive process. This scarcity and the effort required to obtain these metals make them valuable. Moreover, gold and silver are durable. They do not corrode or degrade over time, unlike other commodities. This durability means that the gold and silver mined thousands of years ago are still in circulation today. In the contemporary economy, gold and silver play a pivotal role. They are used in various industries, from electronics to medicine, and even space exploration. This widespread use further enhances their value. But perhaps the most compelling reason for their allure lies in their role as a store of value. In times of economic uncertainty, gold and silver have proven to be reliable, safe haven assets. They maintain their value over time, offering protection against the eroding effects of inflation. Thus, these precious metals are seen as a store of value, a safe haven asset, and a hedge against inflation. And that, friends, is why gold and silver continue to sparkle in the eyes of investors. Now that we understand why gold and silver are valuable, how do we go about investing in them? Well, one way is by purchasing physical gold and silver. This can take the form of coins, bullion, or jewelry. Investing in coins is a popular choice among many. They come in various sizes, making them accessible for different budget ranges. Coins are also easy to store and transport. Plus, they're available in numerous designs, adding an element of collectability. Bullion is another option. Gold and silver bullion are essentially bars of these precious metals. They're typically purchased for their metal content, not their aesthetic appeal. Bullion is a great choice for large-scale investors looking to store significant wealth in a compact form. Jewelry, while not a common investment choice, can also serve as a means of owning physical gold and silver. However, it's crucial to note that the value of jewelry isn't solely based on the precious metal content. Factors like design, craftsmanship, and brand can significantly influence the price. Regardless of the form you choose, buying from reputable dealers is paramount. This ensures you're getting what you pay for in terms of purity and weight. A reputable dealer will provide certificates of authenticity and offer transparent pricing. Once you've made your purchase, secure storage is the next step. You can store smaller quantities at home in a safe or hidden location. For larger amounts, consider a safety deposit box or a private vault service. Remember, investing in physical gold and silver isn't just about potential financial gains. It's about owning a piece of history, a symbol of wealth that has withstood the test of time. It's about having an asset that isn't tied to the digital world, a hedge against inflation, and a safeguard against economic uncertainty. Remember, physical gold and silver are tangible assets that you can hold in your hand, and there's a certain comfort in that. Physical ownership isn't the only way to invest in gold and silver. Financial instruments can offer a more convenient alternative. Exchange-traded funds, or ETFs, are one of these alternatives. They track the price of gold or silver and trade like stocks on major exchanges. They're easy to buy and sell, providing a liquid way to invest in these precious metals. But remember, with ETFs, you don't actually own the physical gold or silver. Instead, you own a share of a fund that itself owns gold or silver. Next, we have mutual funds and index funds. These funds often invest in a portfolio of mining companies. This means you're not directly investing in gold or silver, but in companies that mine these metals. So, your investment is also influenced by factors affecting the mining industry, like operational efficiency and mining costs. Then there are mining stocks. If you invest in a mining company stock, you're betting on the company's ability to profit from mining gold or silver. It's worth noting that mining stocks can sometimes outperform gold and silver prices, but they can also underperform if the company faces issues such as labor disputes or operational setbacks. Lastly, there are futures contracts. These are agreements to buy or sell gold or silver at a set price in the future. Futures can offer higher returns, but they also come with higher risk. That's because futures are leveraged investments, meaning you can potentially lose more than your initial investment. Of course, each of these options has its own set of benefits and risks. ETFs and mutual funds offer liquidity and ease of trading. Mining stocks can provide higher returns if the company performs well. Futures contracts can offer substantial returns but also carry significant risk. These financial instruments provide exposure to gold and silver prices without the need for storage or insurance, making them a popular choice for many investors. So whether you're a seasoned investor or just dipping your toes in the world of precious metals, these options can provide a convenient way to add gold and silver to your portfolio. Investing in precious metals can be rewarding, but it's important to do so safely. Just as you wouldn't put all your eggs in one basket, you shouldn't put all your money into one type of investment. Diversification is a key strategy for minimizing risk. By spreading your investments across a variety of assets, you can protect yourself from potential downturns in any one sector. When it comes to investing in gold and silver, consider allocating a portion of your portfolio to these precious metals rather than making them your sole focus. Understanding market trends is another crucial aspect of safe investing. The prices of gold and silver fluctuate in response to global economic trends, political events, and changes in supply and demand. By keeping a close eye on these factors, you can make informed decisions about when to buy or sell. Remember, though, that predicting market trends is not an exact science. Even the most seasoned investors can't always get it right. Avoiding scams is also vital. Unfortunately, the world of precious metals is not immune to fraud. Be wary of deals that seem too good to be true, companies that are not transparent about their practices, or sellers who pressure you to make quick decisions. Always do your homework before parting with your hard-earned money. Thorough research is your best defense against poor investment choices. This includes researching the precious metals market, individual investment products, and the reputation of sellers or brokers. Don't be afraid to ask questions or seek professional advice if you're unsure. Investing in precious metals, like any investment, involves some degree of risk. But by being savvy about the risks and how to manage them, you can increase your chances of success. With careful planning and due diligence, investing in gold and silver can be a safe and effective way to protect your wealth against inflation. Remember, the goal of investing is not just to make money, but also to preserve the value of the money you already have. In times of economic uncertainty, gold and silver can serve as valuable hedges against inflation, helping to safeguard your financial future. So, there you have it, a step-by-step guide to investing in gold and silver safely. We've explored the intrinsic value of these timeless assets, understanding how their worth transcends economies and eras. From the tangible allure of physical gold and silver to the modern convenience of financial instruments, we've unveiled the various avenues you can explore to include these precious metals in your portfolio. But remember, like any investment, it's crucial to tread with caution. We've shared some vital tips to ensure your journey into gold and silver investing is as secure as possible. Be it researching your dealers, understanding market trends, or diversifying your portfolio, safe investing should always be your mantra. Thank you for joining us on this journey into the world of precious metals. Remember to subscribe to the House Lux Estate channel for more insights into wealth management and smart investments. Until next time, keep your assets golden.